Hello, Warriors. Who's ready for the Consumer Pain Index? Are you, Angelo? Are you ready for it? Hi, Alexander. How about you? Sinatra, Michael, Saloom, surprise rate cuts. Okay, AJ, Brand, I'll lead you. I'll be the first one to fall. K-Man, Ryan, Dream Team, Kurt, everyone's hanging out here today. Aya, James, Blake, brother, how are you? Paul, Alexander's ready. Everyone's ready.
I'm
All
I'm
right.
glad I'm glad you'll be
I,
the first one to fall, Dale, because that'll give us
I,
something soft to land on when we go over.
there's nothing more than anyone that will fall first for their friends. Okay,
Exactly.
so I'll do it. Victor's ready. Couple of observations. You know, the pair that looks the worst is Aussie. Okay, so if we do get somewhat of a hot number, that looks like a flag. Could take it down to 520. Um, I bought euro yesterday and took half off only because if it is a hot number, we could get 1, 2, 3. Okay. Um, so that's the way it looks to me. Last week I was talking about 105.50. We got to 445. So are we going to do it again for a 3 like euro? Maybe. Otherwise, that's it. If we start closing back over under 105, I did want to talk about uh, yields because that number that we had on Friday, the NFP tried to terminate the decline in yields. And, maybe we get another one, ABC, but that turned down. And TLT recovered nicely. We'll see if, I'm still bullish bonds unless we take out 90. I still think that there's a bond rally happening. That's going to happen. And that's it. I want to talk to you guys and see how you're positioning in front of it. You doing anything here, Ryan, before I fall and break yours?
I'm clinging on. I'm clinging on to some. Well, I've got Aussie. I've got dollar longs versus the MEX, and that's just moon
Oh yeah,
shooting at the moment.
yeah.
Um, I'm short dollars via Kiwi. That's
Okay,
that's right on break even. So I don't know. I'm probably going to let that just run. That'd be a bit of a punt.
yeah.
Um, But apart from short dollar China, which is got some margin in it, I'm just going to be looking to react really, see what the CPI does, and then get plotting for the Fed.
Okay. So, what are the expectations, and what should we look for in the number?
The numbers expected to come out pretty much unchanged. Headline unchanged at 3.4%. The core dropping a pip to 3.5% from 3.6. If it's softer, then you're going to see rate cut expectations picking up. So this bout of dollar strength will probably reverse some yields coming down. If it's on the money, it's probably a bit neutral. Leaves the Fed giving the same message that they've done previously. Again, that might, after the reaction from the NFP, that might bring a bit of dollar selling. If it's hotter than expected and higher than last month, then you're going to be seeing yields jumping and the market getting all panicky about and pushing the Fed for hikes again.
Okay. So, yeah, it's very binary today, isn't it? Because I could see,
Yeah.
both things happening. So I'm mentally preparing for both. The yields right here. I mean, this was a pretty good move. Maybe it's just a pullback and we get another shot up. So we'll see. I wanted to ask K-Man, good morning. How are you?
Good morning,
K-Man?
Dale. Good morning, everybody.
All right. So we were talking about Looney yesterday,
Yeah.
and I still think it's a good short against this 38.5 level
hmm
here. And it's actually a better short this week than it was last week.
It does
They
look like
cleaned
it. Yeah.
Yeah, they cleaned out a lot of the stops, so the only stops they didn't get is this, but everyone else who had stops over, you know, these kind of highs, they're gone. So what are you thinking in Looney?
I'm oh, I'm waiting for the data, Dale. I think if it's a very sticky number, I think the dollar Canada is it's waiting to get into the 138s, I think.
Okay,
Really.
that's okay. Yeah,
But if it's the market is again dying to sell dollars, right? Like in front of every news data. Um, yeah, I think if it's a weaker one, then I think the dollar will get a spanking against I guess virtually everything.
yeah,
Yeah, I've got two currencies. Well, I mean, I'm a little long Kiwi, but mostly crosses. I've got only a tiny bit versus dollar right now. But I think there's a couple of currencies of choice to trade. Not sure if the euro is one. The euro is coming back because the spreads are narrowing a little bit, and probably the market running short ahead of the data. But I guess if we get strong data, stickier than expected data, I think the euro dollar will take a little bit of a knock on the head again. Um, and the one that I think that could actually fly because it's just not coming down, despite the expectation of what Bank of Japan may do, is the dollar yen. Dollar yen is just so stubborn. I think if we get really strong numbers out of the US, I think dollar yen flies again. I said it yesterday on Friday after on the payrolls, and we saw the 157. Well, I'm going to say if it's again a very strong number, I think we'll trade 159 before we go into the Bank of Japan.
And K-Man, hey, good morning, guys.
And
good
Just
morning,
since
Blake.
since since you were just talking about the yen, I thought I'd jump in here really quick because last night, amongst the Chinese inflation data that came out, the Japanese PPI came in really hot, and they even revised upwards. Do you think that's going to play a part in the BOJ's decision at the end of the week?
well, they can. Well, the expectation is for them not to move this week. I had to screw back on my expectation myself because I thought they would move, but they themselves don't seem to be in a hurry to move. This is the PPI, it's not the CPI, but
Right.
okay. I mean, yeah, it's a bit higher. I think it just will reinforce the fact that they will screw back on the a bit on the bond buying, but then um, what's going to happen? I don't know. If the number is weak today, obviously the dollar yen will come down in sympathy with the other dollars. But I'm looking at those yen crosses, and it's an absolute nightmare to be short of them. And if you look at the sterling yen, we just did fresh highs. If you look at stuff like Kiwi yen or so, or CAD yen, they're just or Swiss yen even, they're just beat. And that's why I think if today the number is strong, the dollar yen is going to go for a ride. And the other one, on the other side, then I think if the numbers come in weak, I think cable sterling is very resilient. I think if the numbers come in weak today on the US, cable, I think can shoot upwards. And it's looked completely through the data. We had those employment numbers, and today we had the GDP, we had the industrial production coming in negative, and the market is just shrugging it all off. And sterling remains strong. So I think if the US data come out weakest, cable is one that could shoot through.
Okay.
And yeah, and Dale, we should probably discuss all of the really big levels that are coming up. And I mean, and it's not just currency. I mean, you can look at precious metals and realize how close to key levels we are in precious metals.
Yeah, look
And
at silver there on the daily right now.
yeah, that's a
50.
flag pattern. But you don't
Yeah, I see it.
yeah,
Yeah.
it's we're at the bottom of the flag, and gold's just a hair away from 2280 support. So then you got to double top if that breaks. You got to think if you have strong data, And because it sounds to me that you think the data might come in a little hot today. If it does, those precious metals look vulnerable in a situation where the
Yeah.
dollar takes off.
Yeah. Well, it never got to 50, so maybe it
Yeah.
will.
But
Anyway, go ahead.
no, I was just going to say, but look at equities. I mean, equities are set up for a blow off top today, man. You know, give us some weak data and get the dot plots going from 3 to 2 to maybe even one excuse me, yeah, just getting the not going to one cut and just staying at 2 cuts, and if we have a weak CPI, I mean, we have stocks that are going to be trading at the S&P will be at 5,400, 5,500.
Yeah, I'm waiting for one more high in the Dow for a short. I think Grega would call it Ellioticians, not just Grega, would call it a ending diagonal. So I'm still waiting for this to be short. There's also the banks. I'm looking for a bunch of 3 drives, and actually that's keeping me patient about doing anything in the S&Ps. XLF, same type of formation, a little weaker than the Dow. And then I'm looking at Amazon, and down here, I was saying I'd like to see one more high in Amazon. And it's
What about that
less
move in
than 3
Apple
drives.
yesterday? That was pretty outstanding.
Yeah. Yeah. So now we have, it just blew it out. It's not even a 3 drive, looks like a breakout.
False breakdown leads to a breakout. That's
Yep.
really
That was it down here. I
Yep.
I got out of my shorts here. I didn't get, the mistake was I didn't get long. And you know what was my tell down here? They were buying Apple calls, big option sweeps here. So I said, I think I'll just get out. And then I was happy I did. And then, oh, I missed it. And then, oh, I'm happy I did. So the
man.
life of a bipolar trader.
Do you mind if I take the charts here?
No, never.
I want to show you
mind.
guys something. So just literally, and I'm going to pull this chart up, which isn't a chart that I look at all the time. Well, I mean, I look at it every day. Actually, I would take that back. But just from a percentage standpoint, just literally in the last 2 weeks, I mean, the NASDAQ 100 is up over 6%. Imagine if we could do 6% every 2 weeks. I mean, it looks like the market is on its way to do that. I mean, we're in like literally blow off top territory where these markets could really just tear today. Weaker inflation data could be it. Today, if we get just a not so sticky CPI, you could really see the S&P rally towards channel resistance, 161% extension. That's 5,500 in the S&P.
Yeah, I could do that.
I mean, yeah. Why can't the NASDAQ 100 reach for channel resistance up around 21,000? I mean, why couldn't that happen? It seems quite logical in this environment where inflation has been running rampant and is factoring into equity markets globally. I was talking.
Did the DAX hold that major support we looked at yesterday?
The DAX did. Yep, it sure did. Let's go take a look at it. It probed below it yesterday, but with US equities higher this morning,
the
DAX is higher. So really, the only thing I could see that could knock this market down would be really strong CPI today, and even if the market walks away from the thinking the Fed's only going to cut once this year, we walk away and we're like, man, I don't think we're going to get a cut in September. Stocks might come down, but other than that, what is going to stop the market? I mean, give us a catalyst, and unless you give us some sort of catalyst, I can't see it. So if that is the case, truly the case, you have to start looking at the dollar as being vulnerable, especially in the event that we have weak data. And then I guess with that being said, you know, if you just look around and you look around at you know, some of these key, you know, pairs like, you know, the Aussie dollar, for example, and the Aussie is just a little bit higher this morning. This is a flag pattern. That dotted line that you see there, that goes all the way back, I believe, to the COVID lockdown. So let's take a look. And I know you said the Aussie is underperforming, and it is looking, I would agree with you, Dale. It is the worst, but you can see really key resistance should we break out. I mean, should we break out, we've got a lot of distance to travel. That is a big triangle. That's a big trend line. And that dotted line is very, very key. But it's not just the Aussie. You got sterling that, as K-Man and Ryan were just discussing how, or I think it was K-Man that was just talking about how strong the sterling is. I mean, this thing has shrugged off about everything. I was looking at the data earlier, and I mean, Ryan, tell me I'm wrong here. I mean, that the data that I saw overnight didn't look fantastic, did it?
Well, from the UK data.
Yeah, UK data. I'm sorry. I say overnight, and you know, it's because Dale and I were sleeping. But you know,
yeah, there's people. Well, over here it's a political football, so everyone's been jumping on the fact that you know, it's a big problem that growth was 0 in April. No one batted an eyelid when it was 0.4% last month. No one will bat an eyelid whatever it is next month. But the 3-month rolling number is pretty okay. You can see they're bang in the middle, 0.7%. So you know, we're in the same boat as everyone else. Everything's got a 0 point on the start of it when it comes to growth and data. Everything's anemic. So we're no different to anywhere else. It's, you know, we've got 0 growth. Germany's got minus 0 point whatever, and France has got plus 0 point whatever. It doesn't make a big difference in the grand scheme of things. But the quid is again coming up as the least dirty shirt still amongst some of the majors.
Yeah, and I would argue that if it broke above today, if it broke above this the new, and it made new highs for the session, which is just, you know, 127.70, that's a 618 retracement. We start breaking that, you know, ahead of the Fed, and you know, all we need is a Fed that's a little bit more dovish. You know, and I have to imagine that the Fed is going to be somewhat dovish because you've got other central banks that are already leading the charge with, you know, rate cuts, you know, whether you're talking about the Riksbank, Bank of Canada, European Central Bank. Now, I mean, you got the Fed that, you know, as long as inflation is not super strong, I think they want to be able to bring rates down to what they would believe is nominal. So let me ask you guys this. I mean, we got about 10 minutes, maybe a little bit less. And you know, I also need to point out the Kiwi. You can see the red dotted line, very, very critical resistance. It comes in at 62.20. K-Man, you talked about it a little bit. I'm going to come back to you though. But Ryan, what are your best trades for today on hot or weak data? Like if we get a hot CPI number, what are you looking to do?
Well, I'll manage what I've got for starters. I'm not looking to take anything new unless we hit some range edges. But really, the CPI is just going to set up the expectations going into the Fed,
Right.
and that's what I'll be trading more than the CPI data.
Okay. Do you think the CPI or the Fed's going to be more explosive today? I would think that the CPI data would set the stage, but it could end up.
It could be. We listen. We just don't know. We're traders. You have to look at all aspects. The CPI data could be explosive either way, whether it's hot or cold, or it could be bang in the middle. And that's important because that's going to get the last minute trading for the Fed in the market. And then whatever the way the market's leaning going into the Fed, I'll make the decision how I want to approach the Fed. If the market's far too hawkish going in, you know, the Fed aren't going to hike. They're not going to likely indicate hikes.
Right.
And so that sets it up for a bit of disappointment if they just keep the same message as the last meeting. And if the CPI is really too low and the market gets all dovish, again, that sets up a bit of disappointment where the Fed will say, well, we're moving our dots and we're staying higher for longer. So CPI is all about what the market thinks going into the Fed, and that's what I'll be looking to trade.
All right. Well, I'm gonna give you guys a little bit more of a, what I'm looking at, and then Dale, I'm gonna go to you real quick. Um, and then we'll go over to K-Man and just, reaffirm the stuff that he's looking at. So, first of all, you can see the alert set up here on the dollar index. Breaking back below that breakout point, that's not a good look for the dollar ahead of this data, but that can obviously change here in a few minutes. I'm actually looking at the Aussie because we're in a bull flag pattern. Obviously, if we get above this 62 or 66.30 level, I think that's going to be a pretty bullish sign going into the Fed. Now, whether we break the flag pattern is something else. Kiwi is very similar because I know we're probing that very key level of resistance. If we get some strong data, strong CPI, and I agree with K-Man, the euro could get a knock on the head. I mean, the euro's been trading. Yes, we're getting some dollar squaring away, ahead of the FOMC and CPI, which we expected. Divergent relative strength. Yesterday, we were talking about a really key support of the euro being at the 161% extension and also the 618 retracement. We were discussing how important that level of support at 107.10 was going to be. And we got as low as I think 17, and then we rallied. Very, very, very key. But if the dollar is strong, the euro is probably going to struggle because it can't even get past the 108 level. I think this is going to be really, really key going into the remainder of the week. So I think if the dollar is strong, you got to really focus more on the euro short. But if the dollar is if the CPI data is weak, I think sterling, Aussie, Kiwi, those are going to be like the ones that I really want to focus on, because we have the BOJ, unfortunately, Friday, which kind of it's not going to allow me to really trade it until Thursday night, Friday morning in Japan. Matter of fact, K-Man, let me ask you this real quick. Are you guys, you going to be around for the BOJ in the ForexAnalytix community in the chat room?
Yes,
Because
so yeah.
yeah, this is a big one, right?
Well, I mean, it's the big one after the last big one. Yeah, well, that's it. If they really give what the market is expecting, that is to reduce by 1 trillion yen a month their bond buying, that's going to be the how do you say, the known unknown, or anyway the expected. So I'm not sure if it's going to do much. It's all about what they are going to say, right? And what
Sure.
Ueda is telling us afterwards. If he says like, well, hang on a bit, because they did talk about the yen level, of course, already. But he said like, well, if this continues in July, we do cut. Perhaps there's going to be a bit of a bigger reaction. But we don't see the kind of expectation trades that we see ahead of other BOJ meetings right now. Of course, we've got those US data, but then I'm looking at the crosses, and the crosses in the yen are not coming off, and that to me
Very,
is telling me that
very,
the market
very good.
is not ready to buy the whole hike story and reduction of bond buying.
Right. So, let me come back to you real quick, because I skipped over to Dale on accident. Dale, what are you looking for today on a strong CPI? You seem to be leaning that direction. And if we get a weak CPI, what are you thinking?
I'm looking to fade dollar strength on a hot CPI. Perhaps one more low in euro, and if we get it, I'm a buyer at 65.20 in the Aussie, and if we get it, maybe we finally get 126.20 in cable. A lot of people piled into it, so I haven't given up on the fact that cable could still give it back. And Canada, I may add, after a strong number, I think we're topping. You're wrong over 8.5, so we're only 100 pips away. It's a nice,
I mean, it's a huge
convenient
triangle.
Yeah.
Huge. Yeah. I
Yeah.
mean,
So
that's a big one.
yeah. So 38.5 is the big number there.
Okay. All right. And, I forgot to talk about the dollar max. So, we had this big, by the way, we hit 1010 or 1850, and we had, if you look at the daily candle from 2 days ago, that was a really big, shooting star reversal at 1850. I thought I'd get a little cute. I shorted just a little bit up there, and I actually got stopped out just above the 1868 level last night. But that was on a like super small position. I would, because I was long so aggressively through this move. I thought would get cute, and getting cute didn't work. Actually, what we did is we squeezed past that 1850 level in dollar max. And this is one thing that in the event we see any type of risk off and you see carry trades unwind, this dollar max, and you can look at Mexican yen, maybe not ahead of the BOJ, but the Mexican yen could probably squeeze. But I think that the dollar max, I've always thought we were going back to 20, and 20 seems very logical at this point, based on what we're seeing. It's a big 38% retracement of this entire move, and it's obviously a big number. So, and according to some banks, only about 20-25% of the carry trades have been squeezed out thus far of these big long-term, peso carries. So there might be more squeezing to go, especially if stocks come down. Ryan, K-Man, any last minute thoughts before we get ready for CPI?
Okay.
No, I've said what I had to say, really.
Okay.
If the thing though, CPI ahead of FOMC, I'm trying to keep it a bit simple. In thinking that if the CPI really comes in, let's say, quite negative, FOMC won't matter too much. If it comes in sticky, then we will have to really watch what those plots and stuff and dots do. But I think a real weak CPI could overpower everything. That's my thought going into the complete setup, CPI plus FOMC.
And I'm with you. I think a weak CPI would really, obviously it's going to have a big impact on the dollar, but I really think it could send the stock market really flying too.
Yeah.
I feel. Dale, any last minute thoughts here before we get into it?
Yeah. Be patient, let the dust settle, and then trade. Give it 10-15 minutes after the number to make decisions. Don't do it right off the gun.
And I want to say something real quick, because I don't know if he's listening in right now, but one of the partners here at ForexAnalytix, Steve.
Oh, birthday boy.
It's his birthday. So Steve, if you're listening in, happy birthday to you, my friend, and my buddy and my partner. So happy birthday to you. All right, and speaking of ForexAnalytix, guys, this is the dashboard that you see here. Obviously there's analysis on 30 different instruments, not just currencies. We have crypto, we have precious metals. Oh shoot, I forgot to talk about gold really quick. And I have just a minute to do so. Just real quick, but we do cover a lot of different assets, not just currencies. But I do want to just point out, this is that big range in gold. Gold's way too close to this range low, so just in case it's hot data, gold would probably come under some pressure. And this is that bull flag that we're talking about. So just, watch those really quick. And I don't think, I was just looking around. We don't have Grega here, so I'm going to make sure we didn't leave him out. All right. And by the way, Grega does analysis on ForexAnalytix. He does all of our Elliott wave analysis. And let me put the dollar back up. And here we go. And I'm going to put it on a 15-minute chart. So what you see here is the dollar to the left. We got yields right in the middle, S&P right off to the right. This is the data flash that came off ForexAnalytix, so we can see the data as it's being released. I'm going to leave that on top. I'll give us a view of some currencies here. And we have about 30 seconds. So Ryan, he's gonna sing us the UK national anthem before we get the data. Right, Ryan?
Yeah, I'll sing the West Ham national anthem as well if you want.
All right. How about for the Hammers? Can you do that?
Yeah. I'm forever blowing
10,
bubbles.
9,
Oh, geez.
8, 7, 6.
Here we go, guys. Stand by.
We've got liftoff, Houston.
Softer.
Softer data. Wow. There goes the market. All right. Well, so, wow. I guess you guys know the play right now. The dollar is getting absolutely smashed. And what do you think? What's your initial reaction here, Ryan, to this?
Yeah, softer than expected. So we're going to undo a lot of what we did over the NFP,
Friday.
I think.
Yeah.
It's still sticky, though. Okay, 3.4%, sorry, 3.3% CPI. That's now 12 months of not going lower than the 3% we saw the low since we came off the big highs from a year or so ago. So, yeah, that will keep the Fed on track. But it's, as I say, it's going to knock out all that expectation that we put on since the NFP.
All right. Well, this to me tells us, and I'm gonna let me just really quick just show you guys how important this is, especially if we get any confirmation of FOMC today. You can see sterling trying to break key resistance right now. Aussie, we're right up at flag resistance. Kiwi, we are probing 62 cents, all very key. And if we get and you know, see the dollar CAD's obviously trying to break lower. If and the dollar yen even, you know, has come under a little bit of pressure, but I would really focus on some of the you know G7 dollar pairs. We're getting really close, and if we get a Fed that is just a little bit more dovish, this dollar could really get wrecked. And as you can see, the S&P is well above 5,400. So blow off top markets in the making as we speak. And you know, if you're not on the train, you know, get out of the way. Get out of the way, or get off the train, or get out of the way. It's all I have to say about equities. So Dale, I know you have an interview with Ask Slim, so I'm going to pass it over to you. Make sure everybody, you know, to be inside our ForexAnalytix community, it's $1 for 10 days. Jump in our chats, because you're going to be around with all of us that you just heard here today, and through the BOJ. We'll be around. We'll see you a little bit later. Good luck today through the FOMC. And for the ForexAnalytix community, I'll see you guys on the daily or on the morning edge in about 45 minutes.
Okay, thank you, Dream Team. Brian, K-Man, Blake. Thank you, guys.
Thanks, everyone.
All right, Steve Miller, Ask Slim. Steve, welcome back. I always look forward to having a conversation with you. I think your work is excellent. How are you?
Thank you. I'm great. I'm glad to be here, and I always look forward to being here.
And great call in silver. You said it was going to be one of the best trades of the year, and you were spot on. You know, tremendous move in silver. How about your initial reaction? I know you're much more of a technician, but does today's CPI confirm some of the work that you're doing currently?
Actually, it does. Of course, it's just a 1 day, one number event. So, I mean, the markets are excited about it. It is pretty much in line with what I'm expecting as far as the movements in a lot of the markets go, and the correlations that I look at. So it's not a surprise to me that we're getting the move we are getting today in the markets. When I look at a bigger picture than just looking at a number like today, and I was listening to you guys discuss this, I'm quite negative on the dollar. And if you just look at the way that the dominoes tip, lower interest rates, which I'm expecting, even though I don't expect the Fed to be that accommodative now, I'm expecting the markets will push their hand. So lower interest rates, which I expect, are going to bring a falling dollar. It's going to bring conditions that are, you know, better for commodities going forward, though I'm not really bullish on gold and silver for the short term right now. But overall, you know, I'm looking for, you know, a weaker dollar and for a peak in the stock market to come, very soon.
Well, you know, you can share your screen, Stephen. You know, I'd like to get to TLT because it bottomed about 2 weeks ago after two like almost failed auctions.
Uh-huh.
And you know, the market came back and we got back to 92, and then they tried to trash it again after the NFP. And this TLT chart looks very bullish to me that we could be trading, you know, above par.
Can you
I
see
think
the
a
TLT chart? I want to make sure it's up now.
it is.
Okay, good.
Okay.
So what I'm looking at here for those people that have not seen our work before is cycle analysis. I have
Yeah.
a weekly chart on the left and a daily chart on the right. What cycle analysis is looking at money flows, rhythms in the market that reoccur on a regular basis. You can see in here that those semicircles in the bottom create harmonics. That's money movement, harmonics, just like actually in music. And you can see this one right in here. That's that dotted one right there that made a bottom right at that point. That put it in a rising phase right over here. This is our momentum indicator, which is the reversal scout, and that's pointing to the upside also. So TLT to me on the weekly is in a rising phase and early. So my upside projections on a conservative level would be 95.25, though pretty likely to get up to 97.60. When you get a formation like this with a higher bottom that holds above the 78.6, then the probabilities of actually testing the last high up over 100 are about 70%. So this is a bullish scenario for TLT. And I'll show you the opposite of that when I look at like the 10-year yields very quickly. This is the daily chart also. So you can see that same bullish formation on the daily chart and pointing to this is the buy zone that we've had in there. So it got, you can see right into the buy zone. Now it's having this uptick today. I'm not sure that it won't have one more dip down in there in the next few days. But basically, you can see this formation is pointing to the upside. On the bottom, you can see this is called the slim ribbon PO, and this is the slim ribbon momentum indicator. And that has turned green, so that's positive. So in TLT, you have conditions that are positive in both the weekly and the daily. If I switch over just to the 10-year yields really quickly, I think that you're going to see the inverse situation right over here. This is a breakdown on the weekly chart right there. This is a breakdown on the daily chart. You could see that we were pointing before today for this to come down, yield projections down to 4.26, potentially down to 41.5, just in this next couple of weeks. And you can see in here on the bigger picture, yields pointing down to about under 4%. So this is certainly going to push the Fed's hand. The dates right over here are out into September on this pattern. And I'll blow this up so you can see the remarkable movements in here as the cyclical patterns dictate this incredible rhythmic action in here. And once you get this breakdown right here, it points to the downside, and that says that it's going to fall through September. So you have rates falling through September, you have treasuries likely rallying up through September, and a condition that is not favorable at all to the dollar, certainly.
Okay, so with all of that going on, you did mention there's a couple things that come to mind for me. That short term, you're not bullish. Gold and silver, I'm sure it has something to do with your cycle work, because fundamentally the conditions of a weaker dollar and lower yields would be a tailwind for gold and silver.
That is correct. And that would normally you would see, now I'm going to keep the side by side up right over here so that you can see these beautiful harmonics that are in here. So right here, this is important. You can see that, I'll blow this up a little bit more. Our reversal scout has turned down. So that says that there is significant change in the momentum, which is negative. This is where the minor cycle is, right over here. And it rallied. Now, the probabilities of taking off that high were better than 70%, but getting down back to this level is negative. What that says is that even though gold could rally up here to 2360 to 2395, that it would very likely turn down again. And we're looking for tests below this level of 2283 or potentially down to this dominant 38%, which is around 2200, 2210. So this is all this corrective period out over here into the summertime. Now, if you look here on the daily chart, these remarkable periods of correction in here where these yellow zones are in these harmonics, and you can see each one of these right here and here and here push to the downside. So we're in one of those right now. So it's getting up today into these minor resistances. Very likely it will fail. You see momentum here has turned negative right over there. The slim ribbon turned negative right here. That says that the rally we're getting today in the gold market, and you can see it's similar in the silver market, is likely going to fail, and you will see a movement back to the downside. So here's silver. It happens to be more positive. You can see the momentum is still positive in there. So I've been believing that the silver gold ratio is going to favor silver for some period of time in here.
Right.
I heard you guys talking about a flag being formed in here. However, cyclically, this flag is already in a failure mode, and it's likely to continue down here until early July. So you could see this minor cycle. Whoops, didn't mean to do that. That's
around
this,
$27.
yeah, this minor cycle right in here, and then the rally that tested it and made that double top, and now pointing down. So this is 27.40, 40.50, something like that. That's really where I expect this to come down to in the next couple of weeks. Now, I'm long silver. I'm buyer of silver. I've made no secret that I'm long a lot of silver miners. I'm going to be a continued buyer. So you can see that this period over here is likely going to bring you another rally. Once you get into this rising phase right there, that equates to this period up here where I think you could potentially get back up close to $30, $31 out into the summer. So this to me is going to be a buying opportunity. But in the short term, I don't really love silver just because I think it's in a corrective mode.
You know, that's interesting because we're going to have a negative dollar into September and falling yields. And this is going to have people wrong-footed buying dips and buying gold and silver prematurely because of those two correlations that are going to disconnect.
Yeah, but I think that you will see attempted rallies in these metals markets. I just don't think the consolidation period has ended yet. And I'm a super bull. I mean, everybody who follows me knows that. And I'm certainly not a doomsayer. I'm not a gold bug. I've never been that. I just follow agnostically whatever the patterns tell me. And I'm a super bull, believing that, you know, looking at monthly charts, that we're going to see much, much higher prices in metals and gold easily into the plus 3,000 area. And I even made a call that there's going to be some time in coming years where the price of gold and the S&P 500 cross. So that's going to be during a period of a stock market bear market, you know, which is out there.
Okay, well, we're in nosebleed territory here, Steve, and
in the stock market,
you know, so you know, and I follow, I watch some of your work, okay, on YouTube. So I'm a fan, all right, and I'm trying to learn from you. And you called the last correction that we had into April pretty good.
Yeah, in fact, we were looking for 5.3 to 8% decline. It was 5.9%.
And we never got that after the bounce, never got that one more flush.
One more dip I was looking for in here, and that did not come. Yeah,
me too. So
you see that low right over there is a little bit to the left side of what the ideal was. So that was, but it was still fantastic. And now, you know, our projections have been 5,400 to 550 up over here. Potentially stopping at 5,450 because there's a monthly resistance right over there. The problem is, and you said nosebleed area. Well, I mean, if you look at the Wilshire valuation based on the Buffett indicator, if you believe in that at all, we're right now this morning at about 190% as the relationship of the market cap to GDP. Well, there's only been one other time you've been that high, and that was, of course, at the top of the bull market here. But earnings have increased, and so this number was 199%. We're at about 190% right over here. And if you think about what happened in the comparative period of the dot-com bubble back in the beginning of 2000, that was 157% valuation to GDP. So the valuations now are beyond anything that you would expect to happen. And a normalization would bring it down probably by about a third of its value. Again, I'm not a super bear. I'm not a super bull. I just do what the markets tell me. And right now they're pointing to the upside, but something is changing. And I made a point of this last week. You can see here on the daily chart, I'm just going to blow this up on the S&P 500. As we project up here, it's running up the top of what we call the slim cloud right there. So that's positive, as you can see there. When you look at the NASDAQ NDX, of course, that's even stronger right over here. And we'll get this to bring the charts up. And there you can see running up here, and we've got it projected up there to 19,400 approximately in this move. Now you see these bullish formations in here, but what's going to keep this market going when you need to have a rotation into the broad market, but you have negative breadth and a breakdown in the Russell? So you've got a situation in here, even though the Russell is going to be up 50 points this morning, you can see these resistances. So the Russell is going to be up around 2075, which brings it above into this upper area here. To me, this is a sell on this rally in the Russell. And this is, of course, the Russell responds well to declining interest rates because they're all zombie stocks and have to borrow tons of money. So you're getting this pop here, but this is a bad breakdown, and pretty likely that this rally that we're getting is going to bring it up into this area and actually up near that 78.6, which I don't even have in there, which is a place to me where the Russell is a sell. So Russell in much worse shape than the rest of the market, as you can see here.
Good.
And I would, I take this as a negative. The breadth has been absolutely horrible. And this is one of the most top-heavy markets that we have ever seen. With very poor breadth and the market being moved up by these mega caps, high caps. It's going to need significant improvement in breadth to change this and to repair the situation. And still, we're looking at massively high valuations. So the stock market, risk rewards are horrible.
Okay, so is it going to last until September? I think that was your original call, that the cycles were positive going into the fall.
Yes, I
right
actually
before
believe
the fall.
I believe there'll be a corrective period over here into the summer. This is the weekly chart on the S&P 500 now. I'm following the harmonics in here, which have been fantastic. So some kind of a corrective period out into the summer, and then that next rising phase out over here, which takes you out into the fall, right over here. And what that does is set up in my opinion, a negative fourth quarter out over there. So when I look at the monthly charts, that still tells me the same thing. So this to me feels like we're going to establish a range sometime. Let's just call it 54.5 to 5,500 with a potential back down here into the 5,100s sometime over these next few months. And then getting into a much riskier period after that. Now, one important thing to say is that, the Fed, and I said they're going to be stingy in here, even though the markets are going to likely be pricing in lower rates. The problem is that how can the Fed cut rates at all-time highs? Inflation's still hot, employment is still hot, employment wage growth still strong. Little blips in numbers don't make a difference. The only way that the Fed cuts rates in any significant way, other than just, some way to join the other markets, the other central banks, for one or two cuts, just symbolically, the only way a significant rate cut comes is if the stock market is getting hit hard. That's the only way. So I actually think that the Fed is going to be enticed to cut rates in the fourth quarter when the stock market really is starting to come down and give a lot of ground up. And that could be a very sizable decline or the beginning of a major peaking. I believe that we were setting into a secular bear market that will last for a very, very long period of time. And that happens when you get to very excessive valuations. You can go, of course, look in the 1930s, you can look at the 1970s. They're pretty comparable periods to now, where you got into periods of good, strong bull markets, big negative bear markets, and some pretty wide ranges that you traded in, with declines of 33 to 50 something percent in the stock market. So that's pretty normal.
Okay.
And I think that's coming.
All right. I wanted to ask you if you would consider, the surprise would be everyone's looking for the market to be okay until just before the election. Even amateurs like my sister, she's going to get out before the election. Okay. So, all right. And she's all right, John Q. Public. So everyone thinks it's going to be okay to be long until the fall, and then we're going to have a sell-off. Wouldn't it catch a lot of people by surprise if your summer correction turned into something more than a correction, and then we rally back into the election after a pretty good decline that's going to shake out people that wanted to wait until October?
So the markets will tell me if that's the case.
Okay.
So this decline right over here, and I'm just going to take this line, if it got down to what is around the 78.6%, let's say close to 5,000 right over here.
Yeah.
That would warn me that the next rally would be deficient, and it would look something like this. So it would come up, not make the highs, and then get into the period of, I'm just putting in a variation in here, of a larger decline out over here. So that's this, the market will tell me when that happens by the depth of this decline, by the conditions in the market. Our reversal, Scott, will turn negative. It will tell me that the longer term conditions are turning negative. That which supports the upside move will be dissipating. The market will tell me that. Our indicators will tell me that. I can, I'm just going to quickly go to this is my website over here. I thought I had the ability to, let me just.
It's okay that you're showing that now.
This, what this will tell me, and you can see our reversal scout right over here in the indexes, what the conditions are. So it'll be in the intermediate term. This is one of our apps. And you can see in here, S&P 500 QQQ, very bullish. You can get notified when these change. IWM is neutral, as that's changed on the intermediate term, and the diamonds are neutral. So you can see which of these markets are in better or worse shape. And if I look at the short term here, you can see IWM has been bearish right over there, and you have this very bullish. You could, by the way, note Apple is very bullish, and it's been that way. So that's this is one of our applications in here that's very helpful for our members. You can look at it as on a trader mode based on what type of a trader you are, or you can look in the time frames here at a 2-hour or daily, or if you look at the monthlies in here, you could see the monthlies are all super positive as they have been. So this is a great application that you can really be able to see our indicators as you look at that. So I just wanted to show that I'm looking at it on the charts, but we have it all built into our system. So.
Okay, you get a lot of tools when you're working with Steve. And Steve, do you have any trials or where people could take a look?
If you look right, there's a couple things. If you want to be a free member, where you get our S&P analysis every single day, it'll be just on the S&P 500. This is our snapshot light, we call it. Just put your name and email address in here, and you'll really start to learn about the things that we do. If you want to, there's only another week of this left to see up on the top. This is our full membership, which is normally $159 a month. you get everything that we do, including over 1,000 videos that I and my team have produced, with about 300 evergreen videos that you can really learn about the markets and our style for just $99. It's non-recurring. So it's best if you use this on the Thinkorswim platform, but still you get all of our important stuff, including our market condition monitor, which is just an amazing application. So just click learn more and you'll be able to learn more about it and sign up. So you can either go to the full level 4 membership up here, or you can get free stuff right over here by signing up for the S&P 500 analysis.
Steve, I put out a tweet to get people to come to watch your elite technical work. And you also have a great communication skill of explaining complicated things in a simple manner so people could get it. Always consider it added value anytime you show up to talk to us, Stephen.
Well, really
want to
appreciate
thank you
that.
for it.
Yeah.
Yes. So I'm a fan. When you were trading on the floor, Steve, where did you live in Chicago?
I lived in Glenview
Okay.
and almost at fully there, and also in Lake Forest for a while too.
Oh, okay. Yeah, I grew up in Skokie. So
well, my family was from Skokie, so
okay. So Steve and I have a few things in common, and really appreciate Steve's giving spirit to come out here and share
appreciate
it. And
that.
he's got a great YouTube channel. So he's part of my intelligence gathering.
Yeah, that's
How
great.
about that?
Just in case you didn't know this, based on how long I've been at this, May 20th, just less than a month ago, was my 50-year anniversary as a member of the CBOE and a trader. So I've been at this 50 years.
Okay.
Mind-boggling.
Yeah. Okay. Yeah. I think, it's going to be close. I'm almost there, Steve. I think I started as a runner on the CME floor in 75.
So you're very close to me.
Yeah. So, guys, take advantage of being able to learn from dinosaurs.
Yeah.
We have a leg in the tar pit. Okay.
Right. You got it.
All right. So, Steve, thanks, man. Good
Always
hunting.
glad to be here. Take care.
I'll get in touch with you, talk to you late summer or fall.
All right. Super.
Steve Miller, everyone, follow him on X at Ask Slim. How much do you weigh?
I'm down to about 224.
Okay, so he's getting slimmer. So that should be easier to remember his handle. And that's a wrap, everyone. Thanks, Steve.
Bye-bye.
And you could join the team, everyone, in about 18 minutes on the Morning Edge. Good luck today. I'm concur with a lot of things Steve said. So I'll see everyone tomorrow. And remember, don't just count your pips, count your blessings. Adios, everyone. Have a great trading day. Thank you again, Steve. People are thanking